What's going on, traders? Hope everybody had a great Wednesday. It is May 10th. CPI data, of course, came out today, and print came in slightly lower than expectations, 4.9%. Most of the major banks had their estimates at 5%, so not exactly the rate of deceleration that the Fed necessarily wanted to see. However, we are on a downward trajectory, so I guess that is encouraging a little bit. Markets were up today. Final print at 412.85, up 0.47%. But before we get any more into the charts, just a quick reminder that this video is for educational and entertainment purposes only. And if you're enjoying the content that I am providing about the stock market, don't forget to subscribe to the channel, smash the like button, hit that notification bell. That way you are notified every time we post updates about the marketplace. All right, so we've been watching this broader consolidation here in the markets for quite some time. And we also have forming this type of megaphone pattern here on the markets currently. So we're watching that as well as this develops. But you can see here when we came in, boom, came back up here at the top and the bottom. So multiple reactions. But the bulls, the bears tried to break us down again today. And really, we've been watching and talking about the break of the range really being the catalyst that would force us to sell lower. So this 407.60, 407.50 area, if that starts to break, okay, then we can start talking about that move to come back into the lower part of this range, closer to that 38.2 extension. But they were unable to do that. So, they couldn't even get here by the May 3rd. So, and we'll go a little bit more in depth about today's price action in a moment. But either way, let's look at the other chart that we normally start off with. This pennant formation, okay, same type of situation where they tried to break lower. You could see a fake break, and then boom, we closed back over that trend line there. So pretty powerful reaction there overall. But so we are looking here, and something we want to pay attention to is, let's take a look. Okay, it's not the right one. Okay, this is to me. Oh, here we go. That's fine. We still are just right above this value area high, and we were talking about this in the previous videos. So I just want to bring this still to our attention that the volume profile is going to need to expand the range a little bit for me to feel slightly more comfortable with the projected long bias. I don't think we're going to roll over. Of course, the bulls are still in firm control. We've been saying that, as long as we're really over that key 400 and 395. So that goes without saying. I mean, I'm still even bullish if we come down in here again. Obviously, it's been tested so many times and defended. But either way, being above the value, I'm not too much of a fan of. However, like we were talking about in the last video as well, last time we were in this area, we were extremely showing those overbought levels on the Momo. Now we have cooled off right around that zero line, which we were talking about, and we're starting to see that momentum come in, and we're coming up a little bit here. So I think that is an encouraging sign. And just because we are above value doesn't mean, that it can't keep going. Totally possible. And yeah, so interesting. Pretty much, the market has been unchanged, but a lot of volatility today after 2 days with not really much to update as we just traded in a range. And it's been pretty interesting as far as that range has been concerned. All right, so let's look into the intraday charts a little bit here, and let's go into Now, I posted these on my Twitter. You can follow me at _SharkTrader on Twitter. But posted these fibs here in the evening yesterday. Just as some areas I was looking at, oftentimes and you've heard me talk about it before, keep it simple, stupid, something as basic as this, right? Fibonacci retracement, okay? This is beginner level stuff as far as technical analysis is concerned, and it's almost cliche, in a sense. But why is it cliche? Well, because there's probably usually some truth behind it, right? And we had, of course, the huge print. Now this is the 4-hour chart. Let me go into something a little closer here. We had the huge print in the morning, of course, at 8:30. This is an hourly candle, so you can't really see, but we came all the way up. And where did we come into here? The 786. Little fake break above, sure, okay, but we wait for candle closes. Boom, can attack that short, and we had a really nice sell side reaction down, back down, okay? Now, oh, sorry, cursor is freezing. Come on. Okay, here we go. I actually today played this move back up, which was a nice little play on some options. I didn't catch much of the short side today, but I did trade this bounce after this first initial sell-off, and which was pretty nice. I think I got about 16 points in futures on it, and about 30-something points on some one day SPY options. But either way, we come right into that 786, like we're talking about, came down, pushed down right basically into the pre-market highs. I was noticing, for this trade, Amazon was coming into pre-market high. The markets were here on the S&P, and Apple as well was coming into a key area on a bullish cloud, and I felt comfortable with having all those points of confluence for taking this trade, and we had a really nice move to the upside. So either way, if you wanted to go with the trend, if we're going with something as simple as the fibs here, you could wait here until coming into, we had a fake break, right? Wait for a recapture of the 50% retracement. Okay, this would be your entry here once it recaptures. Okay, you're not trying to necessarily catch the bottom. You don't need to catch the bottom. And then you get the move back up. Now, if you're quick enough, again, this is, elementary stuff, and, that's why, I kind of wanted to bring this to your attention, because, it's so easy to overcomplicate trading, right? So, that's why something simple as this can really give you some nice opportunities if you're willing to wait for them. So the next opportunity here, right at the 618, boom, you could tag the short. Maybe you didn't want to take this long down here. That's totally fine. We're not here to catch every single wiggle in the market. But if you caught the short here, you wanted to go with the trend, you waited, right back up here. Okay, you're taking this short, right? And then even if we're going to say this, where's our risk? Maybe here at the top. Whoops. Do something like this, the top of these candles. So if I was getting in that short, I'd probably be playing something like that. My risk in short up into here. Okay, if it gets over 412.55, we're out with the candle close. Right, so boom, come back down. Another little entry here with another lower high, and boom, short to the bottom. Okay, then where do we come? If you're patient, we've got 3 moves, right? Okay, rule of 3, down into the 382. Boom, tagged along right here, whole number 409, little fake break. Okay, boom, come up, first target. All right, now at this point we've got the cross. If you're doing moving averages, I did not catch the bottom here. I actually got stopped out. I took a long right here, but I gotten stopped out. But I missed the bottom. I was waiting, but I did get in right here again for some calls and on some futures. So this was a nice little trade. But as you can see here, price action moving under the 9, and we are back above the 50% retracement. And it's a little bit clearer. You can see this was a bit of a flag right here. And we had obviously broken this downtrend. Flag up, boom, come up, second target right here. And then anything else is a cherry on top. And we came basically right into the double top area here. So, you could say, came into this area here, right? Okay, so that's pretty much how you can play it with something real simple, just using these. You don't even have to have your levels. And that was, and these levels right here, that was from what I did last night, just using this swing high and swing low. So anyway, so what can we project for tomorrow? Well, let's change it up a little bit here. We haven't looked at a good old liquidity in a minute. Okay. We can keep this on, sure, if we want to. So what are we looking at for tomorrow? All right, so obviously a lot of sellers up here. Now we've really created a nice area of buyer liquidity in this area after this giant run up. So, I'm probably going to be looking to see, I was talking about this on Twitter, really that 412, 4140 on ES is a big level for me, 4135 as well on futures. But as long as we're holding over that, I'm pretty much using that as a bull bear pivot, at the moment. 410 has also been very, in play within the last couple of sessions. But as far as this hourly is concerned, I mean, really nice levels here. Maybe you want to watch that 413 here where we have the double shaded area of buyers. We can do this right here. And let me actually get this off. I don't know where I have a clean one right now. Okay, that'll have to do. You can see this area right here. Oh, whoops. Okay, maybe as some point of reference. Okay, so 413 down to 412.52. Really, 412 for me is going to be the last stand. So that's going to be interesting to watch. Obviously, here we can see this big block of sellers right above. So that's 414.25 to around 415. So I'll continue to look at those areas as well. We had such a high day of volatility today. It wasn't necessarily a trend day, but it would be likely, maybe we do have PPI, as well, but it'd be likely to possibly see similar price action in the sense that we might have some wild swings in the market, whether that's coming back up but then coming back down, something more like this, but maybe to a little bit of a smaller scale. So that's really what I'm going to be watching out for. Again, it's Thursday, so I'm not really sure, how the markets are going to react and how everything gets digested. But as far as, I'm concerned, as long as we're over these key levels, then I'm going to maintain my bullish bias. And if we start to get under, all right, I'll shift. That's the biggest thing, and the hardest thing for a lot of traders is being able to shift that bias quick enough to be able to make actionable plays when they're long, and then they just keep adding into a long, keep trying along. And I've been guilty of it myself. So, and then finally they realize, oh my God, it was such an easy trend day, so I'm watching these areas right here as kind of a reference point. If we start to get above and below, that 412 here, 412.14, or start above these areas here, 415. That's where we're really going to need to see for the next move. But I'll be watching this if we just consolidate. And this isn't, it's, what is this? 412, I mean $2 or $3, $2.50. Okay, we bounce around here. It's not the best, but it's manageable. Let's just get in a little bit tighter. Okay, not too much has shown up as any different. Okay, I mean, just tons of buyers in this area here. So even if we break down, I mean, it doesn't mean just to go buy the dip willy-nilly, but I mean, we can really put this line in the sand, probably then down here, this 410.50. So, I mean, even if maybe you don't even want to react in this area, maybe if we get down in this area, only maybe consider taking some type of a counter trend trade. If we were down by this 411 area, we've talked about that, or that's been important here for the last few days, as you can see here in this range day where we were banging around here as the lows. But if we start to get under that, okay, then I'm going to be looking for that 409.55 again, and then lower as well, back down to these lows. But, until we really start getting below, like for me, sure, I might try to play this range. Maybe I'll try to play here. If we break below 412, I'll probably stay hands off. There might be a short trade in there. If we come back up, retest, then I can get a move down. But otherwise, I might just ignore this and just sit on my hands. Maybe you want to take a look at the highs here. All right, we can make a case for something in this area. Right, maybe and that's just like a 30-set one, 411, 84 to 411.50, we'll call it. See if they can hold that area there. But either way, like I was showing you guys on the fibs, it's better just to wait. Wait for the trade to come to you. Okay, if it's not at the level that you have predetermined, or not at your fib level, and then there's nothing to do, and you're just going to be waiting for those high probability setups, waiting for it to come into one of your retracements or whatever it might be, one of your supplies or demands, and then you're taking the trade. But too often times we're trying to catch every little move, and we don't feel like we're trading our best if we're not. Okay, all you need is a short, maybe a short and a long, 3 trades, boom, you're done. Okay, or even after, hell, I mean, if you were trading futures, or if you got in right, I mean, I don't do this, but you got in right at this higher low at the open, this lower high at the open, right? Sure, if you're going to do that, it's not my style, but if you do something like that, and then you catch that trade all the way to the downside, what else do you need? So keep that in mind. All right. I hope everybody has a great day. Let's see what we get tomorrow. Take care.